Money Watch. This morning, we are looking at the biggest money-saving moves you can make before the end of the year. 23 days left in 2021. But don't worry, you have plenty of time to make financial decisions that could help you save big when tax time comes around in April. CBS News' Jill Schlesinger is here with more. Okay, so number one tip right off the bat, what is it?
If you want to reduce your tax bill, you want to put some money into your retirement account through work. Now, I know everyone doesn't have that, so I make that as a caveat. But if you just push up the percentage for the last couple of pay periods, you might save yourself real money come April. And again, this is for pre-tax retirement accounts. The other issue is a lot of people had strange income patterns over the last year. You probably want to go over to the irs.gov calculator, figure out if you've withheld enough money, because as much as you want to save money, having an unexpected bill in the future, not pleasant. So you may want to adjust your withholding. If you're self-employed, maybe you want to make some sort of payment as a quarterly estimate.
What about charitable donations before the end of the year?
Well, this is a great time because amid COVID, Congress actually was able to create a way for more people to get a tax deduction with their giving. So normally, about 90% of taxpayers, they file the standard deduction. You don't usually get any credit for giving money away if you file the standard deduction. Now, if you are a single filer, if you give a cash contribution to an eligible charity, you get a $300 deduction. $600 if you are a married couple. And again, this is just for 2020 and 2021. It goes away. So if you want to feel good about your giving, Uncle Sam will reward you this year.
Now, speaking of that, in an effort not to become Scrooge, some people are screwed financially by giving to a charitable cause that doesn't exist, somewhat of a scam. How do you avoid that?
The IRS has a bunch of rules out, and it's unfortunate that charitable scams are always a problem this time of year. Part of the issue is that you get a call, you get an inbox email, and you say, oh, give to this charity. The charity name sort of seems familiar, but it's not the charity you actually know. So before you give any money, please make sure the charity is legit. IRS.gov, there's a search tool. You can make sure that it's legit. Next, of course, you know that you don't want to give anyone your credit card information until you actually understand that. And of course, if you at all concerned, just say, send it to me in the mail, and I'll try it that way.
Some people also scam the IRS with fake charitable givings, like, oh, yeah, I put that 10 grand in the church plate, all cash, no receipt, sorry. Can I get the benefit?
No.
Don't do that, people. I want to talk about home office deductions, right? So this drives me nuts. People have been working from home throughout the pandemic, and yet they get no deduction for that space.
Oh, poor Tony.
I don't need a whole show from home.
I mean,
a whole show.
Okay, 2017, we had a big tax law, right?
Yeah.
And in that law, there was a rule that said, if you're an employee, you do not get to deduct your home or business expenses. That's through 2025. Now, good news is, if you're a gig worker, you're self-employed, go ahead, do this, but make sure that your residence, before you start deducting, a certain amount of my rent or my mortgage, make sure it's the exclusive use, that part of your house for work, and that you've done it consistently, follow the rules. But everyone else, I'm sorry, too bad.
I hear you're sounding the alarm for people who are 72, that this is a very important year for them.
Yes. Okay. So there's something called a required minimum distribution for people who put money away into retirement accounts pre-tax. The government is asking and is actually forcing you to take money out. They always do this. It was suspended in the year 2020. If you don't take out your required minimum distribution from your 401k, your 403b, or your IRA, the IRS will impose a penalty of up to 50% of what you should have withdrawn. Required minimum distributions. If you're over 72, don't forget to take it before the calendar year end.
Pay attention to your money now.
Right now.
That's right.
That's a good one.
Money Watch. Dollar Jill. Jill Schlesinger, thank you so much.